The Golden Guard, a comprehensive guide to the iShares Gold Trust, IAU. As of February 10, 2026, the financial world is witnessing a historic gold rush 2.0. With the global economy navigating a complex path of physical AI industrialization and shifting central bank reserves, the price of gold has reached levels that were considered speculative just 2 years ago. For many investors, the iShares Gold Trust, ticker AAU, has become the primary tool for participating in this surge without the logistical headaches of storing heavy metal in a basement. Whether you are a first-time investor or a seasoned professional looking to hedge against 2026's geopolitical volatility, IAU represents a unique, pure play on the world's oldest currency. This guide will walk you through how IAU works, its standing in the current market, and why it is often chosen over its more famous competitors. 1. What is IAU? The digital key to physical gold. IAU is an exchange-traded fund, ETF, designed to track the spot price of gold bullion. When you buy a share of IAU, you aren't buying a stock in a mining company. You are buying a fractional interest in actual physical gold bars held in secure, audited vaults around the world, including London, New York, and Toronto. The structure: physically backed, for every share of IAU issued, a corresponding amount of gold is tucked away in a vault. The penny of gold. IAU was originally designed to trade at roughly 1/100th of the price of an ounce of gold. As of February 2026, with spot gold prices pushing toward record territories, averaging near $4,900 per ounce in recent volatility, IAU's price reflects that proportional value, making it highly accessible for small-scale investors. Trust status: technically, IAU is a grantor trust. This means the trust does not manage the gold to make a profit, it simply holds it on your behalf. 2. The 2026 context: why gold is surging. To understand why someone would buy IAU today, you have to look at the unique economic climate of February 2026. Central bank diversification. Since 2022, central banks, particularly in emerging markets like China, India, and Turkey, have been buying gold at a record pace. In 2026, this de-dollarization trend has accelerated. As nations look to diversify their reserves away from fiat currencies, the massive, consistent demand provides a floor for gold prices that benefit IAU holders. The hard asset hedge. While the stock market in 2026 has been driven by the automation megatrend, there is a growing fear of valuation bubbles. Investors use IAU as a portfolio insurance policy. When the tech-heavy S&P 500 experiences a flash crash or a correction, gold often moves in the opposite direction, negative correlation, protecting your total wealth. Geopolitical risk premium. From trade disputes over Arctic resources to ongoing regional tensions in Eastern Europe and the Middle East, the world in 2026 feels unpredictable. Gold is the ultimate fear barometer. When headlines get scary, IAU typically goes up. 3. IAU versus GLD, the battle of the titans. The most common question for new investors is, should I buy IAU or its big brother, GLD, Spider Gold Shares? While both track the same metal, the choice usually comes down to your investing style. The cost advantage, the expense ratio. IAU charges 0.25% annually. GLD charges 0.40% annually. For a long-term buy and hold investor, IAU is almost always the better choice. That 0.15% difference might seem small, but over 10 or 20 years, it can save you thousands of dollars in management fees. The liquidity advantage. GLD is the king of liquidity. It is the preferred tool for massive hedge funds and high-frequency traders who need to move $1 billion in a minute. However, for a regular investor trading $1,000 or $100,000, IAU is more than liquid enough. The bid-ask spread, the cost of getting in and out, is virtually identical for most users. 4. Financial performance, the 2026 snapshot. As of early February 2026, IAU has been one of the top-performing assets in many portfolios. Key data points: February 26 estimates. 1-year return, around 73%. Gold has been on a relentless run higher over the last 12 months, significantly outperforming traditional bonds. Price movement. Recently, IAU broke through significant resistance levels. On January 21, 2026, a surge in geopolitical news saw IAU move nearly 3% in a single day, a massive move for a commodity. Net assets. The trust currently manages approximately $78 to $80 billion, making it one of the largest and most stable commodity ETFs in existence. 5. The invisible costs, taxes and storage. Before you click buy, you must understand that the government treats gold differently than stocks. The collectible tax. Because IAU holds physical gold, the IRS categorizes it as a collectible. If you hold IAU for more than a year, your long-term capital gains tax rate is capped at 28%. This is higher than the typical 15 or 20% long-term rate for stocks, like Apple or Honeywell. Pro tip: many savvy 2026 investors hold their IAU shares inside a Roth IRA. Because Roth IRAs are tax exempt, you can avoid the collectible tax entirely, making IAU an incredibly efficient way to store wealth for retirement.
The friction of the trust. Since gold doesn't pay a dividend, the 0.25% management fee has to come from somewhere. The trust sells a tiny microscopic amount of its gold every month to pay BlackRock, the manager. This means that over 30 years, each share of IAU will represent slightly less gold than it does today. This is called tracking erosion, and it's the price you pay for not having to hire a security guard for your backyard vault. 6. Risks. What could go wrong? Gold is often called a safe haven, but that doesn't mean it is a safe investment. In 2026, IAU carries specific risks. The opportunity cost risk. Gold pays no interest. If the Federal Reserve surprises the market with high interest rates in late 2026, investors might dump gold to buy bonds that pay a 5 or 6% yield. When cash is king, gold often loses its luster. The AI efficiency risk. If AI-driven mining technology makes it 50% cheaper to extract gold from the earth, the global supply could increase, putting downward pressure on prices. Volatility. Gold can be swingy. It is not uncommon for IAU to drop 10% in a month if a major peace treaty is signed, or if inflation data comes in lower than expected. Counterparty risk. While IAU is audited, you are still trusting BlackRock and JP Morgan, the custodian, to actually have the bars they say they have. In a total global systemic collapse, paper gold might not be as useful as the physical bars in your hand, though for 99.9% of economic scenarios, IAU is perfectly secure. 7. Strategy. How much IAU should you own? In the modern 2026 portfolio, gold is no longer just for doomsdayers. It is a legitimate asset class. The 5% rule. Many financial advisors recommend a 5 to 10% allocation to gold. This is enough to protect you during a market crash, but not so much that you miss out on the growth of the stock market. The rebalancing tool. IAU is great for rebalancing. When the stock market is at an all-time high, you sell some stocks and buy IAU, buying the insurance when it's cheap. When the market crashes, you sell your IAU, which likely went up, and use the cash to buy stocks at a discount. The micro option, IAUM. If you are an ultra-frugal investor, iShares also offers IAUM, iShares Gold Trust Micro, which has an even lower expense ratio of 0.09%. It is essentially the budget version of IAU for those who want the absolute lowest fees possible. Conclusion. The timeless hedge in a digital age. The iShares Gold Trust, IAU, is the bridge between the ancient world of physical wealth and the modern world of instant digital liquidity. In 2026, as we face a future of AI disruption and shifting global power, having a golden guard in your portfolio provides a psychological and financial safety net that few other assets can match. You aren't buying IAU to get rich overnight, though 2025-2026 has been a rare exception. You are buying it so that no matter what happens to the dollar, the euro, or the latest tech stock, a portion of your wealth remains tied to a substance that has been valued by humanity for 5,000 years. The verdict. If you want a low-cost, highly liquid way to own gold without needing a safe, IAU is the gold standard of ETFs in 2026.